Security tokens were the trendiest subject at any blockchain industry event for a brief period of time in 2018. In 2020, the market capitalization of security tokens increased by way more than 500%, and the best is yet to come. But what exactly are security tokens, and what's the fuss even all about? Well, let's dig in and find out, shall we? Hey folks, and welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already, and make sure that the post notifications are turned on so you never miss another video from us. Without further ado, let's dive right in. The content in this video, though, is for educational purposes and hence should not be considered as actual financial advice. Please do your own due diligence and consult your own financial advisors before making any investment decisions. As 2020 is about halfway over, the initial challenges that many security tokens encountered have largely been overcome. Now, there always will be bumps along the road, but the market has progressed since then, especially with blockchain technology being matured and legal understanding of digital assets dramatically improving. Just look at the number of applications that now use security tokens for any given reason. Many other notable blockchain initiatives, both in the US and around the world, have ambitions in the security token market. Blockchain is by far one of the most rapidly evolving technological advancements in recent memory, and its innovative decentralized approach is being used by a wide range of sectors. Part of this appeal does stem from cryptocurrencies, which is already a decade old, going back to 2009 when Bitcoin, the first established cryptocurrency, was launched. When Bitcoin first appeared, it was just that, money. The word cryptocurrency is, however, a little out of date. Because of the popularity of initial coin offers or ICOs, there's now thousands of distinct cryptocurrencies available, with ICO-generated coins referred to as tokens. The year 2021 will most certainly see the birth of a specific type of token known as a security token, which is one of the most promising applications of blockchain tech yet. Originally used to indicate fiat money alternatives in general, the Bitcoin in particular, cryptocurrency has evolved into a catch-all term for any payments which can be transferred via blockchain. After Bitcoin became old news, the market gravitated towards more utility. The aptly termed utility tokens are the outcome of the initial coin offering, or ICO, in which users of a blockchain network pay the tokens sold during the ICO or that they win for providing some other relevant input. Golem is a good illustration of this, as it allows users to give their PC's power to a network, which then uses it to run a remote supercomputer. GNTs, or Golem network tokens, are earned when users connect to the network, but they can also be purchased on an exchange. Users are then rewarded in basic attention tokens, or BATs, for using the Brave browser and watching advertisements. Brennan Eash, the co-founder of Mozilla and Firefox, established the Basic Attention Token, or BAT, in an effort to harness blockchain technology to improve the security, fairness, and efficiency of digital advertising. It's the Brave web browser native token and is developed on Ethereum. The white paper from BAT was published on January 7th, 2018. Although a beta version of the Brave browser is available for download, the project is still in development as of 2020. Companies have found new methods to apply blockchain and digital currency to already existing problems and difficulties, such as web browsing and web-based advertising, as the technology has grown in popularity. The Basic Attention Token, or BAT, is a cryptocurrency that runs on the Ethereum blockchain and is accessed using the Brave web browser. BAT's creators want to change the way advertising is done in the digital age. Current trends, they believe, are disadvantageous to users, publishers, and advertisers alike. What happens is many users are bombarded with advertisements and trackers, as well as malware that is becoming more aggressive and powerful. As platforms like Google and Facebook drive down the price of content while taking a large portion of advertising revenue, legacy publishers have seen their ad revenues plummet. Furthermore, bots and malware are able to cause more and more damage every single year, and platforms have experienced credibility issues. Furthermore, because platforms dominate these functions, advertisers lack appropriate targeting strategies and information so as to convey their content effectively. Bats creators believe that by tracking how consumers engage with digital advertising content and preserving the data in a distributed ledger, they can improve the digital advertising experience for advertisers, publishers, and users. Users will see fewer advertisements and material that is more relevant to them. On the Brave platform, the BAT token is utilized as a method of payment for a wide variety of advertising services. It's intended to be shared amongst users, marketers, and publishers, and it's based on an uncommon concept, but one that is vital to advertising business in the digital age: user attention. However, in certain situations, these tokens are really little more than credit card loyalty reward programs, and the platform in question barely needs to be valued in the token form to function. The market pretends that the underlying business's value proposition and market or potential are real, make its tokens more valuable, which is an exercise in ambiguity. Now, this isn't always the case. Even though projects like the ones stated above are continually gaining new partners and users, their tokens continue to move in relation to Bitcoin and the market as a whole. As a result, utility token holders are purchasers of a service rather than investors within it. The only benefit that they really receive as a result of their participation is an unregulated crowd sale that is the chance to use the service itself. Security tokens, which are essentially digital liquid contracts for fractions of any item that already has value, such as a house, car, painting, or equity in a firm, provide a much better balance. Fractional ownership of a real asset denominated in security tokens is a more structured approach, and investors can expect their ownership stake to be retained in the blockchain ledger. Security tokens serve as a natural link between traditional finance and blockchain, which benefit both. This is due to the fact that the assets distributed via tokens already exist in the traditional market, including the largest markets like equities, public or private equity, and real estate. Many blockchain projects now include platforms that tokenize equity rights for pre-IPO companies, thereby undercutting the conventional ICO model. Due to the lack of regulation around utility tokens, organizations seeking cash can avoid the expenses and accountability associated with institutional financing. However, given the cryptocurrency market's constant volatility, as well as its precipitous 2018 collapse, followed by a bull surge into 2020, it's grown riskier to start an ICO and end up expecting conditions to be stable enough to run a business. In order to actually stay afloat, many projects have started cashing out right away. This debunks the already flimsy premise that ICO participants are quote-unquote investors in startups and makes room for new concepts like the elephant. The elephant is the first blockchain-based secondary market for pre-IPO shares. After a startup's initial public offering, the rights to future shares in the company are then tokenized. The elephant's marketplace adds a huge amount of liquidity to the already crowded market for assets, which is known for being difficult to traverse. Because companies are taking longer to go public than they need to, many people will be unable to exercise their equity rights for up to 10 years. To the benefit of both rights holders and cryptocurrency fans, blockchain infrastructure now enables a market where these rights could be transparently bought and sold. The goal is to combine the traditional financial market and the cryptocurrency market for the mutual benefit of both. Other projects, such as Funderbeam, are working on similar concepts. Funderbeam has already assisted over 100 pre-IPO firms, blockchain and non-blockchain alike, in being able to raise over $5.8 million. Cosm Exchange is adopting a rival concept called Byte, or a blockchain instrument for transferable equity, to sell its own stock on the blockchain. Even Nasdaq has become interested in introducing blockchain into the public company listing process, with its recently unveiled Link platform allowing private securities to be issued to the blockchain. The cryptocurrency's massive market increase and subsequent crash at the start of 2018, followed by a recovery through 2020, were followed by the highs and lows of 2021's tumultuous price action, spurred in part by high-profile media attention and viral retail interest. What does stay consistent, though, is that the projects that remain standing in the aftermath of the storms are those that deliver a sense of true value to its investors. In 2021, digital assets will have substantial applications, surpassing the media hype crypto, which has little value other than a long shot at going to the moon. Retail investors, institutional investors, and regulators are increasingly aware of the potential of companies that deliver genuine value. companies which seek finance will no longer aim to avoid institutional models, preferring instead to seek out those that have already adapted to the regulatory environment. The security token could have a long-term impact on financial markets due to its real-world applications and ability to establish value. It's incredible to see how far we've come in such a short period of time. While security tokens at first were promising, the timing just wasn't right. The rise and importance of security tokens will enter a new age in 2021 as DeFi converges with greater general knowledge by everyone from investors to regulators to attorneys and developers. And with that, we've come to the end of our video. We hope that this session was informative, and do let us know in the comment section below what you think about all this. Also, subscribe for more content just like this one and share it with your friends and family. Also, don't forget to smash that like button and ding the notification bell so you never miss another content update from us. Until next time, folks, we'll see you later.